Good afternoon, traders, and welcome to the Hot Stocks Outlook for November 30th, 2018. Hope you're all having an excellent week in the financial markets, and as always, plenty of opportunities to cover here. We're going to start here with POOLCORP. We've got Sealed Air, American Assets Trust, Callaway Golf, and also EnCana there in the oil and gas sector. So starting here with POOLCORP here, what we're looking at are daily price action bars here. So all of these bars are end of day data and represent a full trading day. So you can see we're going all the way back towards the beginning of November, really end of October here. And looking here at POOLCORP, we have some indicators against that price action at the very bottom of the chart as well. And also off to the right, there's actually a predicted bar. Now, all of these indicators really work to round out the entirety of this predictive forecast. So when you're looking at a individual stock, in this case POOLCORP, we can see that we have this black line here and also this blue line. Now, that black line that you see on the chart, that is what's called a simple moving average, or what we refer to as the actual moving average here. And that is a very common technical indicator. Just takes the past close prices, averages them together, and it's going to plot that line moving forward through time. But what we're able to compare that value, which is acting as a good summary of where prices have been, is we're comparing that to this blue value that you see on the chart. And that value is actually using predictive data generated from the artificial intelligence and neural networks found within this software. So for this value, for that number to even be plotted, it's looking at how other markets are interacting and affecting, in this case, POOLCORP. So the S&P 500, the dollar index, other related stocks, ETF groups, and it's looking to predict those prices forward out into time. So once that blue line crosses above the black line, it's saying, look, the prediction is that prices are expected to go higher relative to this lagging or simple actual moving average. But there's a couple of other indicators that can help you with the day-to-day trading. So once that blue line crosses above the black line, the trend is essentially up. And we see here that there's been a really nice move to the upside here in POOLCORP. Really great opportunity to get long. Over 12% move to the upside, $17, almost $18 per share. You know, obviously, even just buying 100 shares, you've made $1,700 in just the past month. But more importantly here, for traders, they really need to know how to adjust and manage a position. And so you see this neural index, it can be bullish or bearish, a green or red configuration. And this is an extremely accurate indicator that's always looking ahead 48 hours. So you can think of it as a couple candlesticks or a couple trading days and letting you know if there's very short-term strength or weakness in the market. And lastly, you have a predicted trading range, so an actual prediction of intraday levels that you can look to take positions on. Now, really the beauty of all this is we see this market went up, almost $18 per share, but shorter term traders want to understand, okay, well, where should I be looking to accept prices? And so we can see this market starts to move. We get a day here where you come in and buy. That market isn't really looking back. You start moving higher. That predicted moving average remains above the actual moving average. And you see how these levels work forward through time. And even on days like this, adjusting and saying, okay, well, expect this market to trade lower, but you're never getting that predicted moving average moving to the downside, right? Telling you the trend has reversed, just saying, hey, expect some short-term weakness when these red neural index signals come through. But the blue line is still very much above that black line. And really the thing is, the more separation, you can see we really held quite a bit of separation through the entirety of this trend, the stronger the trend. So if that prediction is, a great deal away from that actual moving average, that suggests the trend is strong. You want to stick with your position. Make sure you capture that $17-18 to the upside, about 12% so far. But seeing markets recover a little bit, and this may be a great opportunity. Here's Sealed Air. So very similar situation here. A lot of stocks are going to come through at similar times. So when you run these scans and see all these crossovers coming through the software, you understand, hey, something's going on. I need to be paying attention here. And you can see very clearly telling you, look, hold on to this market. Obviously go in with those predicted low and predicted high ranges, so you can decide where you want to get involved. But very clearly here, up until the last couple of days, where it's saying, okay, expect a little bit of weakness towards these predicted lows, but you want to be a buyer in the market. And you see, as this market moves up, you explode past those predicted highs, which is generally what you're going to expect in an uptrend. But you want to know, hey, where's a good level to be getting involved in with these markets, and understanding that, look, as long as that trend remains up, stay in that configuration of being a long or a buyer in the market and make some money to the upside. So, the big thing about trading here is really adapting to these changing market conditions. We can see October, a lot of markets sold off. A lot of markets are still very weak from October, but many have recovered. And so had you gone ahead and shorted some of these markets, well, it's saying, look, trends are reversing. You want to go ahead and get long in some of these areas and take advantage of these opportunities. Here's American Asset Trust. So what's very interesting about here, you see some volatile price action, but you get this crossover here from that blue line, predicted moving average moving above the black line, saying, look, the trend is up. And you see you get this volatility. Neural index comes down to a 0. You get this down day. But that's really the benefit here, is understanding that, look, the trend is still up. That predicted moving average is still holding well above that actual moving average. And those predicted ranges are going to let you know, hey, don't have your stops or anything running inside this area. Expect the market to trade down at these levels, but maintain that long position so that you can, get involved with this upside, not get out of the position until, of course, the trend has reversed. So here in American Asset Trust, things moving much, much higher, but really great opportunity to deal with that volatility, understand, hey, hold on to that position and get involved with a really nice trending move up about 12.5% or $4 per share on a pretty cheap stock here, about $37 per share. You have 500 shares, making about $2,200 to the upside just in this past month here in November. Now, mentioned some stocks not doing as well, and so you want to make sure that you're avoiding those areas in the market. Here's Callaway Golf, and you see very clearly a lot of weakness from the neural index. Crossover to the downside, you really understand, okay, well, if I want to go long in some of these other areas that we've covered, but also maintain some short positions in the market to really create that hedge, you see how this works of saying, okay, well, intraday, I need a good level to go ahead and get involved in, but I need to know, hey, what's my directional bias? Should I expect some short-term strength or weakness over these trading periods so that you can make sure that you hold on to the trend and that you're not jumping off board just at the wrong time and really missing out on a lot of volatility and some very significant moves that we've seen here just over the past couple of weeks and this month, really getting a mixed market. Some things doing well and other things really just continuing a lot of that weakness from the previous month here. We see Callaway here down 11% in 11 trading days. So $2.38 per share on a $21 stock, now trading below 19. So really a great opportunity to the downside there. And something we've covered quite a bit here is the weakness in oil and gas, just as a sector, and also if you trade the commodities, oil being very, very weak for a very long time here now, a couple months coming off of that 70, moving down to 50. And all the oil stocks have similarly moved in that direction, but you want to, of course, again, pick your spots and understand, okay, well, where do I want to be short? Where is there a lot of separation between that predicted moving average and actual moving average? And you see what happens here. You get a little bump up in the neural index, market runs sideways, but the trend's still very much down here. So you want to understand when you're likely to see that sideways action and strength, but also understand that the overall trend, the bigger move, still to the downside. And so make sure that you use those predicted ranges in those shorter time periods to know where you want to set those short positions. So rather than even, messing around in all these trading days, maybe when the neural index goes bullish, you understand, hey, at least try to get in up at these levels, up at the predicted highs before you go ahead and reset shorts in the market. So you just see how, get that directional bias, and then day to day, you're getting those intraday tools that are letting you know, hey, if you want to add to your position, maintain that position on a existing trend. And then once that trend reverses, you're going to understand, okay, well, the trend's reversed, the blue lines come above the black line, and obviously all those other indicators. So your neural index will get bullish, your predicted high and low ranges will change. But until then, you want to stick with those positions and make sure you get involved in these trends. You see this market cut in half, down 46%. And a lot of these oil and gas sectors, some of them actually starting to turn up and showing some bullish signs very, very recently. But over the past couple months, you just want to short these things and remain short. And pretty much the same thing on the commodity side as well. So really great opportunities. We certainly are getting a lot more mixed markets. The market's actually doing very well and a lot of volatility coming into the marketplace. But again, just a great time to be involved in the markets and trading. So everyone, have a great rest of your trading week. This has once again been the Hot Stocks Outlook for November 30th, 2018. Best of luck. Thanks again, and bye for now.
you.